Hello, everyone. Welcome to our uh, our demo day for the 10th cohort, so the ninth cohort of Hummingbot Botcamp. So I think we're still waiting for the folks to join. We should expect a larger audience than normal because we've invited not just the folks in this cohort, but the alumni and the mentors and everyone in the Botcamp community. I'm really excited to share the all the hard work that the students in this cohort have done. I think we have seven strategies that have been submitted that we're going to present. I think if there's any more, so basically I'm just taking all the ones that people have submitted in the Botcamp strategy designs template. Because I think that's really the requirement now. If there's any that because haven't submitted in that template, please let me know. But otherwise, I think we'll just go with the seven that we have. So let me share my screen and we'll go through the presentation. I can share the sound. So okay. So yeah, hopefully hopefully this will work. If there are any technical issues or sound issues, please let me know. We are going to record this and publish it on YouTube afterwards. Hopefully we can get the technical issues out of the way and create something that works for everyone. Okay, we do that. This. Okay. All right. Yes. So yeah, so as I mentioned, today's demo day. So this cohort, I think, has been our best one so far. I think because we've had the most number of participants. I think we've also kind of, because Hummingbot now has 2.0, this is the first time students have really had a chance to backtest and use dashboard and use some of the new components we've added. And so I think this model of kind of like having larger cohorts with which gives us a chance to introduce new material every time, I think is going to be a signature of Botcamp cohorts going forward. So first, before we get started and go into strategy demos, let me go into a bit more details about the certification process for the folks who've submitted their strategies, discuss what comes next, and to give you a preview of cohort 10, which will be in November. So in terms of certification, the process, the way it works is basically all the demo day presenters are certified. So everyone who has submitted both a video and a strategy template. So thanks to everyone who's done that. So the next step is you guys will receive essentially a demo day cohort NFT like this. This is one that was given out to cohort 7. So basically, it's each individual, including the team members. So each of the individuals, including teams, please just send me your ETH address either by email or Discord. I'll try to get the first edition printed by end of the week. So if you do it end of the week, I'll add you the first edition. If you do it later on, I'll add you to the later on to the same edition. But because it's an ERC 1155 NFT, so the way it works is it's a limited edition of, let's say, like 7 or whatever, and then there's an initial batch, and then I can add more later on. In addition, we're going to do a round of voting at the end of the demos, and then just like a quick like a mobile phone kind of voting thing, where basically you'll allocate basically stack rank the strategies you've seen in this demo today, and then the top vote getting strategy will get our cohort. So this should be cohort 9 NFT, MVP NFT. This is like a fun thing that we do to try to gamify the process a bit. In addition, we do have certification is kind of like a separate thing outside of this whole NFT thing. I know that there's been a lot of students here who maybe because of work or other reasons have not had a chance to complete their certification submission. You can still get certified. All you need to do is submit your design template, either the operator template or the strategy design template, along with your video before the next cohort demo day, which will be on December 10th. If you do that, we'll play your video and during that demo day, and you'll get the certification. However, you won't get the cohort NFT. That's the only difference. But we do want to make certification kind of like a proper thing, and try to have like essentially a core list of people we can point to, if let's say exchanges are asking us to refer market makers, whatever. So well, eventually I think we'll try to build out like more of like a certification area, where people can actually have a profile or something like that on our website. So in terms of cohort 10, we've been kind of like mapping it out. As I mentioned, I think we'll be this will take place on. We're going to make it a bit. We'll actually probably add a week in between the last live session demo day next time. So it'll be like a 6-week program. Starts November 5th to 10th. We just published the sign up links for this. In addition, there'll be some new content for cohort 10. We're planning on kind of splitting the content into a developer track and a market maker track. So this is kind of like we kind of already been doing this naturally with our content. It's kind of like the live sessions for this cohort has been over 2 hours. So in the next one, we'll have essentially 2 live sessions every week, where I'll lead the market maker session. We'll cover primarily theory, kind of like more of the history and also the business side of market making. Whereas Fede will cover more the developer side, how to properly use all the components of Hummingbot that we've introduced, like backtesting, the deployment, repo, the quants lab, all the tools to actually properly do the dev side. So what we think it offers is like basically like the students who join the next cohort can attend both if they want, but they'll probably pursue one or the other in terms of certification. So hopefully that'll kind of like give people kind of like be just a better experience overall. So the way that applies to you guys is, I would say, if you wanted to refer your friends, we're experimenting with something called Helos, or actually it's called Helio. Sorry, it's actually Helio. Basically, the way it works, it's a Solana based app where you have a link that's basically people can pay in USDC. So as long as you connect your Solana wallet to this link, you can create a referral link. And then someone that uses your referral link to pay for Botcamp will, you'll get 10% of their payment. So I think it's a neat way to do affiliate, because otherwise, like, we have to handle all these like random like links and all that kind of stuff. This is an easy way for us to just like have one link, and then but have anyone in the community be able to kind of like create a custom link of their own attached to their wallet that they can give out. And then whenever someone uses that to buy Botcamp, they'll get 10%. So essentially, we have 2 links now: a regular sign-up link. This is a normal sort of like sign-up page for Botcamp, and then also a Helio link that people can get out as affiliates, essentially. So the price is the same as I think the current one, but if you do, just like before, if you are a Botcamp alumni, if you're taking one cohort, you want to do it again, we'll give you $1,000 off. This time around, I think it'll be easier for us to just DNS, and we'll just kind of walk you through the process of either paying by crypto or give you a credit card discount code. So in addition, so in order to kind of like properly like market this and kind of really grow the numbers, because overall, I think the lesson we've learned from this cohort is that having more people really makes it better for everyone. It creates more discussion on Discord. We are seeing people self-organize and help each other out more, and I think it also allows us to serve, basically like trying to serve everyone at scale instead of trying to like doing small ones. So that's why for the next one, we actually want to try to grow the number of people, hopefully over 50 participants. So to do that, we're going to try to do like more of these info sessions where it's really kind of like taking some of the high level content that we offer in Botcamp and just giving away for free. So I'm going to do an info session just on market making, just trying to explain the landscape right now, what the opportunities are for both the individual and institutional market makers, considerations for token projects that we're thinking about getting the token listed. So I'm going to basically like try to essentially offer some value while also telling the world about our next cohort of Botcamp. So this one, if you guys are free, I'd love for anyone to join and share their experience of taking Botcamp. Just kind of like if you want. So this will be on October 1st, and And so yeah, I'll send this out to the Botcamp email listserv as a reminder. But I think this we're going to try to do more of these info sessions in the future, where it's kind of like it's not so much about Botcamp, but more kind of like what you can learn at Botcamp, trying to shed more light on market making as both the industry as well as a kind of opportunity set for traders out there. Okay, so that's enough of logistics. Hopefully, I think the overall what we're trying to really do with Botcamp is provide educational resources using Hummingbot for areas that for us there's just a lack of kind of like traditional academic teaching. So market making is obviously it's something that is kind of like native to crypto, but it's also something I think is kind of like it's a fundamental financial kind of activity which is translatable to many things. So hopefully, what we're teaching here is like it's kind of like it's rooted in fundamentals first and foremost. Okay, so enough of kind of like marketing stuff. Let's move on to the strategy demos. Really excited to present the 7 strategies that people have submitted. The way I ordered this was in how many people first submitted, but also the folks who respected the 3-minute time limit are coming first. The folks who had longer ones. So I think we do have space for longer ones. So I'll try to play the long. Some of the folks have submitted like 10 to 15-minute videos. So those are near the end. But I'll try to, as a warning, I might speed up your longer videos or speed through them to try to make things up. But since we'll only have 7 videos and we have an hour and a half, I think I'll let the longer ones slide. All right. As mentioned, if you guys have any questions for the participants, please put them in the chat. What I'll try to do is after each presentation, if the person's in the line, I'll leave room for the strategy designer to answer a few questions. All right. Well, if there's any more questions, let's proceed with the first one. The first one is from Christophe. It's dynamic market making based on Bollinger Bands. So I'm gonna play it, and please let me know if you can't hear the audio or if it's like too loud or too low. Thanks.
So I decided to create a dynamic market making bot using Bollinger Bands as a technical indicator. So it's quite simple because there's only one level of orders on this one. On tick, if there's an unfilled buy or sell position, we create one. And we set the spread depending on the volatility. If it's not a high volatility, we use the default spread. And if it is a high volatility, we use a higher spread. And this is an instant volatility, basically the last minute. I haven't been using this because it's not really working, so I haven't implemented it in the code. But on tick, if there's a high volatility, we cancel any unfilled position. Basically, that's the concept. The bot has been running for almost 48 hours and it's been trading a lot, as we can see here. If we look at the status, we have over $20,000 of volume traded. I think the initial capital is around $80. It's not been profitable for several reasons. First, it's difficult. It's difficult to find to do a profitable market making bot, in my opinion. But also, one of the reasons is I haven't handled correctly some of the stop losses that are happening in cascade. So this is something that I definitely improve. These kind of cascading stop losses are definitely killing the profit and loss for the bot. One of the things that has been working very well, actually, it's stopping the current orders when there is a high volatility. we have pairs of detected of high volatility, and we are stopping the unfilled executors and waiting until the volatility is down to a normal level again to restart the orders. Overall, Hummingbot is great because I feel like everything is possible. You can backtest in code very effectively. This is the code for the backtesting. So I think the limitations is mostly on the algorithm, or it's not the tool itself that is the limiting factor. Is more about the market knowledge and the trader knowledge.
Okay. Thank you very much for that video. Wait 1 second. Let me turn my audio on again. Sorry about that. Thanks, Chris. Thanks, Christophe, for that presentation. Do you have anything you want to add about your strategy, or does anyone have any questions for Christophe?
Yeah. Did you compare the real performance with the backtesting later on?
Sorry, can you ask that again?
Did you compare like the performance that the backtesting was like doing? If you compare like when running the live bot, the performance was similar or expected as the one that you were doing the experiments on backtesting?
Not really, not really. My gut feeling was that it was similar. So that my gut feeling is that the backtesting was in line with what I was experiencing while running the bot, but it's just a gut feeling.
Yeah, it's more like as an estimation.
Yeah, I mean, what could have, maybe you're thinking of backtesting over the same period that the bot was running.
Yeah.
Yeah. It's a good thing. I didn't do it. But I did it previously during this bot camp. I tried exactly this. I didn't do it for this specific case.
Okay, perfect. But well, very, very good job there.
So
Actually, I'm doing that, and I found that we miss a little bit when we have like highs and lows, depending on the resolution. So I added a PR, consider highs and lows for stop loss only. So probably with that also will be more right when doing the backtesting. Yeah. Well, great work.
Thank you. Very quickly, did you look at the code?
Not really. Not really yet.
Okay.
I need to check.
Yeah. I was just curious if you reviewed the code.
I will check all the codes, and I will give back in this week.
Thank you. So if you guys have any questions. Yeah. Okay. Was it? Oh yeah, Claude. You're asking why the trending did not work. Well, basically the trending, I don't know if I will be able to explain correctly. The trending is interesting when you're actually seeing in the past always. The trending is happening in the past. You can't predict the trending that's going to happen. So I think it was difficult to use the trending in a way to make the bot more profitable, because it's already in the past. I don't really know exactly how to make it work, even conceptually speaking.
One question for me, Christophe. Which pair which pair and exchange did you run this on?
I was. I don't think it doesn't. I didn't do any research, but I was using Aave on basically Aave USDT perpetual on OKEX. It's okay. Honestly, it's unrelated. I didn't code it to a specific okay. Pair. It was really super generic, and I think this specific algorithm could work with any pair, but with a bit of changes in the parameters, because some pairs are more volatile than others. But so it's just to adapt a little bit to if it's like a super volatile or less volatile. If you're gonna do ETH or if you're gonna do a meme coin, you're not gonna use the same thresholds for volatility and things like that. But nothing more than this.
Yeah. Actually, the way I would think about it is kind of like I would, exactly as you said. I would try different strategies for like meme coin. The meme coins are very trendy, versus like the ones like ETH. I think ones like ETH almost like it's like because they're hedgeable and because they're almost like predictable. They're almost like they kind of like they have like they're very hard correlated now with macro events like interest rates. Those the ETH and those pairs are almost it's almost like I would always take a different strategy. I wouldn't take like super technical strategies with them anymore because you can now do more fundamental or macro kind of based strategy with ETH. Whereas I think strategies like this, I think are almost like best on meme coins, because those are the coins where it's like because you can't hedge them, using technicals is the only thing you can do.
Yeah. Another great thing about this strategy is that, well, I think that you need to add a little bit the thing about trending, mainly because the continuously stop loss that you have from one side, probably that can be prevented or minimized with the trending thing. But regarding that, or besides that, I was doing a quick math, and you made like 341 times your initial balance of volume. So it's like it's generating a lot of volume. If you do like 20K to 20.5K divided $60 was the initial amount.
$80.
$80 were a little bit less. So
yeah, but the reason is because for this bot, I think I chose to have a very, very tight spread, like a tight default spread of 0.5, even around 0.5%. The reason is I wanted to have a lot of trades to understand how the bot works. Because if you just have very, very few trades, you have little statistics in the end to understand how it works. You know what I mean?
It's more adjusted by luck, if not. But
exactly.
Yeah.
That's exactly right.
You need as most trades as possible.
Yeah.
But what I would recommend,
what
I recommend after this is think about how to incorporate the trending. Continue running the bot if you can, like if you don't want to lose a lot of money, is reduce the amounts that you are trading on so you can have continuous operations. But the most important thing is to evaluate how is the performance of the bot, because the most of the time that you show the bot was trending down the market. So you would like to see how it behaves when it trends down, when it trends up, and probably when it's stable, it makes money. So these are things that after a few trading after you trade on a different regimes, you can then say, okay, well, if the market has these statistics, I will do this or whatever. But probably will help you to understand, like, okay, what is happening here? Why I'm losing money here? Okay, the market is trending down. I have a lot of stop loss of long executors. Okay, how can I count that? And I don't know, if I have X amount of stop loss executors plus my trading indicator is short, okay, I will prioritize going long, going short. So probably you can have more take profits with the longs, and so. But
yeah. So just one comment about concerning the trending and the latest version, because what I said in the video is not. I improved the algorithm since I released the video. So for example, just an example of how I'm actually using trending is to avoid this cascading stop losses. So let's imagine I have one of the ways is if I have a field position and I open a new one, then first I check if there is an existing one with a negative on the same side. with a negative P&L. You see what I mean? If it's a negative P&L on the same side, I'm going to actually even give a higher spread, so
Perfect.
that it's less likely that it's going to be actually filled.
Yeah,
So
you know what is you know what is that concept?
No.
Well, that is you are doing that with the P&L because you are using executors, but that is very similar as the Avellaneda-Stoichkov model. Because the Avellaneda-Stoichkov model, if you think about it, you have the overall inventory because you have active executors. But in this framework, the open or unmatched volume is related to the open executors. So if you are seeing which are the open executors that has negative P&L, is the same as if you sell and the price went up, so you are going to prioritize put the sell order more up and the
Exactly.
So it's a very similar concept, and I think that can work really well because you are going to be like hedging the longs and the shorts that you are selling.
Yeah. But honestly, I haven't really been running the bot with this upgraded algorithm, but I've been back testing it, and I reduced the losses by I halved the losses over the same period, just in the back test, in the same period. So for example, in a back test of 2 weeks, I don't remember what I had in negative P&L, but after my improvements, I had half of that initial negative P&L by doing this improvement.
Nice.
So it improved.
Nice.
It improved at least quite significantly the P&L.
Great. Great work.
Yeah. Thank you very much, Christophe, for that presentation. So let's move on to our second one in the series. That one is market making with D-Man V2 from Marcus Lindley. So let's play Marcus's presentation.
Hello, my name is Marcus. This is my video for Cohort 9, Certified Market Maker. I am using the D-Man V2 strategy in order to generate some positive P&L over my test period. I'm also going to be taking advantage of the rewards on the exchange that I'm using as a secondary benefit. I went through and began adjusting the D-Man V2 on the pair I chose, which was VeChain Tether USD. I went back in here in my chart to do some technical analysis and gauge the moves that I'd like to try to set in the market making strategy and see what types of results I get. I used this chart in order to do that. I then went over to my Hummingbot instance that I have hosted in the cloud and began doing that and ended up with a backtest that looks like this, as well as another one yesterday that looked very similar. So I had implemented this bot and it's been up and running for about 24 hours. The current state of the bot is, I think it's in a little bit of a loss at the moment. Yeah, it's in a little bit of a loss, about $5 right now, which might be accounted for through the real world slippage between what a backtest gives you and what reality gives you. So that's why I'm testing. You can seeing what the results really are versus what a backtest showed you, and then maybe adjusting accordingly after that and retesting. It's up and running. As you can see, it's been doing buy and sell orders. So I believe it's, yeah, today's test was like this. Turned out pretty well. Basically just like yesterday, around 70s. That's where I'm at so far. I started with 45,000 VET and about 1,400 in USDT. the strategy is going to run. I'll come back and re-update this performance analysis section once the test is complete. And you can check in the Notion and see what the results were. Thank you. Have a good one.
Cool. Well, thanks a lot, Marcus. That was a really clear presentation, and I think that I think you're actually, that's a really good starting point for your strategy. One thing I noticed just in your results was it looked like when you were actually running the bot, your executors were all the close type, was all time limit for them. I think it was like, and I think you also saw this in your backtest as well. I think a lot of your backtest close types were majority time limit as well. So I would actually look at probably extending that, like increasing the time limit part to giving, because I think like right now I think that your take profit and stop loss levels are probably relatively wide given the volatility in this pair. So you probably need to increase this time limit in order to let like let the price kind of move around more, so have a chance of hitting your take profit levels. So that's where, but I think it's good to like you kind of started with backtest, moved into live testing, because I think doing that iteratively is the way to go.
Thank you. Yeah, I was definitely trying to see what was actually happening versus what like that. I've seen backtests that look really great on other bot software and stuff too that just end up not really performing at all in real life. So I don't necessarily believe a backtest until I see a live test, right? So that's kind of just what I'm shooting for, is trying to make sure that everything that I'm implementing will test out and relatively perform around the same. And I knew not to try to tune too hard and make it perfect, because you want results good but not too good, that kind of like rounded out. So that was kind of my strategy with doing this, was really trying to get that sweet spot in the middle where at least I don't lose money, maybe I gain money, and then I can get the rewards and whatever's going on in the exchange at the time.
Okay. And maybe one more question. Why did you choose VeChain? Any any reason there?
Overall, I think I'd bought it many years ago, and I just had a bunch of it still in a wallet. So I had a bunch of that, and then I'm like, okay, I'll just throw this over on KuCoin and see what goes.
Yeah. So actually, I think that what you'll find is I think these older coins are actually might be good in market make for. The reason is because a lot of these older coins, like it's like because they've been out there for years and years. There's statistical models that model like how they trade relative to other assets in the market like ETH or Bitcoin. And so what happens are once the people would automatically change the bots which basically buy and sell these coins based on based on where ETH and Bitcoin move. But usually these projects, they don't actively hire market makers for them. So because of that, like these coins, like these older coins tend to be less liquid, but also there's less people actively like kind of hunting for arbitrage and like market maker opportunities. So in some sense that could be interesting because it's like they trade actively on many different exchanges. So there's probably like lots of like cross exchange opportunities, I would bet, with ones like VeChain out there.
Yeah, that makes sense to me. And that was actually really one of the thinking was I wanted to pick for the test something kind of relatively established, so that I could measure the history of the moves. That was part of my technical analysis, is always going back and finding the whole history of the coin and figuring out what something like this would work in.
Yeah, and so the trade-off in going with these older coins is it's like there's less like organic trading activity. So it's like you don't have like the spike in volume that actually kind of like, it's almost like sometimes like having a lot of volume is good for you, because if it's range bound, then you have lots of trading activity, and there's more like more like volatility and kind of like for you to earn. So the issue with I think the older coins is more like, because they only kind of react based on market moves typically. Can you actually can you actually find the can you kind of find a differential between them and the market where you can harvest that differential actively over time? But I think what I'm pointing out here is more like I do think that pair selection makes a big difference in your strategy, because it's almost like based on the characteristics of the coin, where it is relative to other coins out there, it kind of changes the strategy that you should play.
Yeah, it does. It's like I think it's great. Like the choices. I was trying not to pick a meme coin in that same kind of way, just to make sure that I was, I guess, picking something that would also test well. I was trying to pick. I think I picked KuCoin because it was like medium in volume. It wasn't like the highest volume for that pair, but it wasn't the lowest volume for that pair. I wanted something that I could probably get clears, but not, not be too necessarily like, I wanted to mimic some of these decentralized exchanges where you're getting some gaps and you don't necessarily know where one thing hits.
Yep. Yeah. No, I think I'm gonna try. Go ahead, Patty.
Yeah. Well, great work, because you were like really detailed on what you want to do. So that's really cool. The same observation as Mike is like maybe the time limit is like the demand V2, the biggest strength, or what it's looking for, is to DCA into a position and then take the profit of it. And probably if the time limit is too short, you are not letting like the BEP going down or going up and closing with a profit. So that's something that I will try to extend a little bit the time limit to see how it works. But then that is really good what you're doing. And based on what you said about comparing with the backtesting, soon we are going to release the version that after you run the bot, you can see the same page as the backtesting and plot the backtesting over the same period on top of the graph. So you can see where are the discrepancies on the trading strategy against the live strategy against the backtesting. And that is perfect for what you said about, I don't want to do something that is very profitable, because maybe you are like doing overfitting on the data. But also it's like you would like to relax a little bit and have a lower performance, but with something more reliable. So with these things, you are going to be able to do this comparison probably very soon.
Thank you. That'd be awesome. Yeah, I think that'd be really handy for helping me like dial things in as I go.
Yeah. Okay.
All right. Well, let's move on to the next presentation. 1 second. Let me add this. And so the next one is PC Yay from a team. This is from Simon and Brent. So let's take a look at their strategy.
Hello. What our team has built is a new market-making strategy that uses a large set of indicators to dynamically adjust spreads based on a prediction of market conditions. This is the list of indicators that are used. This list is by no means exhaustive, and it would be trivial to add or remove indicators from the list.
Yeah. Let me one second. Let me try to increase the sound here a bit. Let me see if I can do that. 1 second. I think it's better if I just do the video itself. Here, let me try this. Okay. Oh yeah, it's NBO file. So let me just play with my computer. I should be able to increase sound better this way. Okay. Okay. So it's my screen. Let's see, sound. Sound is up all the way. All right. Okay. Well, you can play it here and see if it works, and let me know if the sound is still too low.
Hello. What our team has built is a new market-making strategy that uses a large set of indicators to dynamically adjust spreads based on a prediction of market conditions. This is the list of indicators that are used. This list is by no means exhaustive, and it would be trivial to add or remove indicators from the list. At a very high level, the strategy aims to tighten the spread when the market is predicted to be on an upward trajectory and widen the spread when a market downturn is predicted. The indicators are calculated from a rolling window of candles. The default is 30 one-minute candles. Parameterizing and optimizing all of these indicators would be computationally infeasible, which is why Principal Components Analysis, or PCA, is employed. PCA allows us to distill this large collection of indicators into a single value that can be used to adjust spreads according to this formula. The user manually specifies the base spread value to use. The base spread value needs to be optimized for this particular market and prevailing conditions in which the strategy is deployed. This value acts as a scaling factor for the PCA values. A base spread value greater than 1 will amplify the PCA signal, and a base spread value less than 1 will reduce it. As the PCA is a black box of sorts, the values for different principal components and pairs can have different ranges, and so this base spread value is important to ensure that spreads stay within sensible ranges. From the principal components analysis, component 2 is selected because it has more predictive power for forward price moves, as can be seen in this chart. The strategy was backtested over a 7-week period with the following configuration and a single spread level. The backtesting results showed a final profit of 52.53% over 107 trades and a maximum drawdown of 15.26% using the default 60 basis points trading fee parameter. We were also able to deploy the strategy with live trading, and it performed well. Finally, here are the future enhancements that we could make to further refine this strategy. The base spread value could be calculated automatically from historical data, and the calculated spread could be asymmetric, i.e., we would have separate calculations for the bid side and ask side.
Cool. Oh, really concise and really clear description of your strategy, guys. Maybe I can ask a few questions. When you calculate the PCA value, like was it like plugged into the bot dynamically? Yeah, I'm sorry. Yeah, I don't know if Brent and Simon are on, but yeah,
I'm here. So yeah, basically for backtesting, it takes the current candle and then a number of candles before that, calculates all the indicators, and then calculates the PCA based on those values. So the kind of motivation behind this was when I started, playing around in a Jupyter notebook and trying to optimize strategies, there were so many parameters because you have all of the default market making parameters. So I wanted to get something that basically you could just throw stuff at, and you'd only need to configure maybe 1 or 2 parameters, but you could include a lot of data. So yeah, this was the kind of motivation behind the idea.
Got it. Interesting. So what I meant was more like, yeah. So it sounds like what you did was you took a set of indicators, and you basically did like a clustering approach to try to figure out like what the underlying components were, and you selected the best component, and you basically create like an indicator based on that kind of custom component, right? Cool.
Yeah. So it's kind of a sliding window.
So it is a window, right? Yeah, that's what I was referring to. Yeah. So you were able to create a sliding window and then kind of adjust your spreads based on that sliding window. Is that correct?
Yeah. So basically, nice. For the latest candle, you would create a spread multiplier. So the controller would do that, and then it would set the spreads based on the current conditions. Yeah.
Cool. No, I think it makes a lot of sense, and yeah, I think this is a great application of like a more sophisticated, like a machine learning based approach. Right.
Yeah, I mean, I went down the machine learning kind of avenue first, but I figured if I can make something more generic and you don't have to train it on individual pairs, then it might be more kind of useful for someone that just wants to come in and, you know, pick it up. So, yeah.
This is machine learning. I mean, this is basically machine learning. I mean, this is like, you know, k-means clustering. So yeah, don't knock it. So, yeah. Any other questions for Brent and Simon?
Yeah, I have a question. So you, if I understand correctly, you basically do aggregation of all the metrics that already show like variation into a single one with a PCA there, and then all the other parameters of the strategy, like spreads and like multiplier for the PCA component. How did you go about fine-tuning those and finding values that work?
So I didn't do a lot of back testing. So I found some parameters that kind of work for the pair that I was using. So that was Solana, USDT. But I think with this method, basically most of the optimization has to be done on the other parameters. So executor refresh time had a big impact. Obviously the spreads. So this will calculate the spread multiplier, but obviously you need to set your spreads to sensible levels. Trying to think what else. So yeah, stop loss, things like that. They all still need to be optimized. But you know, it kind of provides a limited number of additional things that have to be optimized.
Got it. Thank you.
Okay. All right. So thank you very much, Brent and Simon, for that presentation. The great use of the more advanced techniques here. So let's move on. Oh, sorry, Freddie, go ahead.
Yeah, I have one more question. Well, first of all, great work. It was really good, the strategy. And just to know, this was applied to the spread multiplier, right?
Yeah. So originally, I kind of wanted to do this asymmetrical spread. So you know, if the market was predicted to go down, basically I'd sell more aggressively and set the spread for the buy to a higher value. But at the moment, both the buy and sell spread work on a single multiplier. So that could be something that we edit in the future. I just wasn't really sure how to do that within the controller. So yeah. So at least the back testing. Yeah.
Okay. So you use the mid price, right?
For
like to place the orders
like
around.
Yeah, basically
around the mid price.
So all it's doing really is calculating those PCA values from the indicators, and then it sets a spread multiplier in the controller, and then that gets passed to the back testing. But I didn't know how to make the back testing engine, you know, kind of accept two different multipliers. Yeah.
Okay, perfect. Well, later on, if you're interested in that, I can help you on testing different on those.
That'd be great. I'd really like to see if it does make a difference. So yeah, that would be cool.
Yeah, and also it's like if you would like to do the same, because the strategy that the logic that you apply here will increase or decrease the spreads based on this PCA analysis. Yeah. But you can also shift the mid price in the same line that you are assigning the spread. You can like assign also the change in the mid price. So that's something that you can also like incorporate here. But well, very good approach here to make something more like generalized. And I think that this like gives you much more power when you want to deploy at scale strategies on multiple markets, because you need to figure out the individual indicators. But well, it also has to work, because probably you can do it and doesn't work. Yeah.
I mean, I did see that, I just can't use these parameters for some pairs. So you run it on Bitcoin or Ethereum, USDT, it doesn't do well. So obviously, a lot of other parameters need to be tweaked. The kind of spread levels and all the stop loss and take profit. So yeah, it's kind of a generic system, but all of the kind of parameters around it need to be tweaked on a pair by pair level. Yeah.
Perfect. Yeah. Well, I need to provide a few updates later on QuantLab, guys, for you, but I prepare a few notebooks to do backtest in, for example, all the pairs available.
Okay.
So it's you can run a single backtesting on in all the pairs at once or by a filter of something, and then a few graphs like PNL, a volume and Sharpe ratio in size. So there are a few things to visualize and pick markets to deploy these strategies. But yeah.
Fede, I have a question on exactly this. When I looked at the QuantLab, it seems like when you are doing the back testing, it's not using the cash candles. The cash candle is only for the market analysis. Is that correct?
I don't know if I pushed, but last week I also had a method to the backtesting engine to load cache if you want.
Yeah, that could be super interesting actually.
Yeah, it's already. I think that is pushed. Probably if you will see it on the X Street. Actually, last week I refactored the whole file system, so it will be a mess because I put on core modules and all that stuff. But now it's also able to get the data from the cache. I'm currently finishing the Optuna thing, so we can also do hyperparameter tuning and test different values for the experiments, and then see all on a dashboard and how the parameters are related together. But yeah, that's why I have a big issue with Optuna these days, because by nature is like synchronous Optuna, and the backtesting has to be async for some of the functions that are async. So I was trying to put all together. I just finally found the way to do it, but I will abstract in a class because it's a little bit messy for a user to do all the stuff. But yeah, probably today I will finish everything and push and merge. So you will see everything there. Okay.
Cool. All right. Well, thanks a lot, Brent and Simon, for that strategy. I think that I'm really glad to see these more sophisticated strategies that people are starting to build with Hummingbot, because I do think that incorporating data science and AI down the road is going to be the future of Hummingbot. All right, so let's move on to the next one in the series. This one is called Shamu by Matt. So I believe this one is an LP based strategy. So and this is obviously my personal my area of interest. So I'm really excited to see Matt's presentation. This was a bit long, but I think I'll just let Matt present the whole thing. So.
Hi there, my name is Matt Marooney. I am one of the Botcamp Cohort 9 students that is going for the market making certification. Just wanted to introduce myself a little bit and talk about this strategy that I put together. So a little bit about me. I am a 30 plus year software developer, architect, so have the software side down, but very, very new to trading, very new to all the financial concepts. So just learned a lot in this bot camp. Really, really appreciate all of the wisdom and knowledge shared by Mike and Fede and Huang, as well as others that I've talked to on Discord. Just really, really enjoyed this class, and I think it's going to be life-changing, hopefully, just with the knowledge that we've gained. I'm also wanted to share a little bit about the why before I get into the strategy. why am I doing this? I just walked away from basically from corporate America, and had a very high paying job that also came with a lot of stress and a lot of the things that I don't enjoy about this industry. So, but kind of walked away from that, and I'm semi-retiring from that world and trying to pursue providing for my family in another way. So, my wife and I have been married for 7 years now, and we've been together for a long time. We've got 8 kids, and so just trying to support all of us with trading, hopefully automated trading, so that I can spend more time with them and just really pour into them. And right now I believe time is the most important and most valuable asset. So I'd like to try to put the income on autopilot and try to leverage my skills as a developer, and the new skills I've acquired through this class, and hopefully continue learning to hopefully do that. So that's a little bit of background. There was one office hour session that Mike actually had, where I kind of asked him, hey, if you had to start over with $20,000 and you had to pick one of these strategies, what would you pick? And he said, I would pick concentrated liquidity market making on DEXs. So that kind of caught my ear, and as he kind of described how he would do that with Orca, this idea kind of came out of that. And so it's a very simple idea. I'll hopefully be able to put this slide deck in my strategy thing so you guys can look at it a little more in depth, but I'm just going to go through this real quick because I'm running out of time on our video here. But the idea was basically to provide continuous liquidity around the mid price, or the current price on the DEX pool. So my hypothesis is if I can keep a very tight range right around the price, we're going to achieve a lot higher rewards, and we'll also provide a better market making experience for the traders, because they'll have a high concentration of liquidity right where the trading is occurring. So my hypothesis is if I keep it tighter and I'm able to use a bot to follow the price around, I would be able to earn more fees than the positions lose in permanent loss, and hopefully will end up being a profitable strategy. So I won't go through all the rest of this, but basically the only way to do this is through a high frequency trading bot. I tried doing it manually, doesn't work. I can't move it fast enough in Orca's interface, so had to program something. So there's some risk management involved in that. I won't go into all of that. It's also in the Notion doc. But the design is very simple. Connects to the blockchain via a private RPC node that I had to set up for performance reasons. I had to basically, it calculates the upper and lower prices, breaks that kind of 2% overall spread into a bunch of 0.1% buckets. And those 2 and 0.1%, that's an arbitrary number that I may try to optimize, but it can basically handle any width of an overall range and a breakdown of buckets. Then basically the bot runs a monitoring loop, and it retrieves the price. It selects whatever bucket corresponds with that price, withdraws and deposits liquidity very, very quickly to move the liquidity around. And then obviously it harvests the fees at the end of the session. This is kind of a visual to show kind of how it works and what it looks like, but it opens up this 2% overall range, and then opens up all these empty positions. I found it was very efficient to open empty positions on Orca using a position bundle. You can open them in batches, costs a lot less than opening them individually and closing them. And then instead of moving the positions, I am actually moving the liquidity. So that's the key to this strategy, and that's how it is able to move so fast. So yeah, basically I tested it on the Sol USD pair. I chose it because it's got the highest volume, highest total value locked, and it also pays out the most fees in 24 hours. So I kind of ran a couple tests. The screenshot over here is from a very, very quick test I did just to grab the screenshot, but just really quickly, I know I'm talking fast, but you can see how it, deposited the liquidity here in one of these positions. It always maintains liquidity in only one position at a time. But I ran this for about 5 minutes. It earned 7 cents on $5 worth of liquidity deposited. That's a 1.4% return in 5 minutes. It's performing really, really well. I spent most of the time in the cohort doing development, so I wasn't able to actually run a 48-hour test. I'm hoping to do that soon, and I'll update the Notion doc with the results. But the test I ran for 2.5 hours. Again, I used $5 in capital. I had a 2% overall width around the price. Each bucket was 0.1%, which is a very tight range. The initial price of Sol was 134.54. Final Sol price was 133.22. And it earned 63 cents in 2.5 hours. That's a 12.6% return. Obviously, this is a very scaled down test. You can kind of extrapolate what that's going to do scaled up. I'll be running more tests and continuing to scale this up over the next couple of weeks, and I'll hopefully update the Notion doc in Discord. So yeah, it's performing pretty well. And compared to just holding the assets, we would have lost 2 cents. So the impermanent loss was 2 cents worth of loss. So made 63 cents versus losing 2 cents. Impermanent loss was mitigated. And that proves in this very small test that the hypothesis is correct, that the fees earned by maintaining those tight ranges actually can overcome impermanent loss. Hopefully that will continue to remain the case. We'll see. I've got a bunch of future enhancements planned. We'll be continuing developing the strategy, but thank you so much for the opportunity again. Thank you so much, Mike and Fede and Huang, and we'll hope to see y'all soon.
That was amazing, Matt. I'm really glad that that I think that your strategy is kind of exactly what I kind of like envisioned when I was thinking about building the Orca connector. I'm really glad you put in practice already, especially using the position bundles, which is I haven't had a chance to incorporate that into API, but I think the idea of like using the bundle to pre-create the ranges and then just automatically just like move liquidity in and out of the pre-created buckets is really smart.
Yeah, that was the key to the whole thing. I mean, I started out trying to move the positions around and it was too slow. I mean, it would take 12 to 15 seconds to set up a position and tear it down. And, that was lagging way too far behind the price. Now with running my own RPC node that doesn't have rate limits or has very high rate limits, I should say, I can literally move the liquidity within the same second. I'm hoping to scale that up to be able to move it. I can theoretically, I should be able to move it multiple times a second, but the withdraw deposit transactions are very fast with the existing positions being there already. So yeah, that was the key. So thank you. Yeah, it was lots of fun put together.
Very great work. Impressive.
But I wanted to start using Hummingbot, but the gateway and the Orca connector weren't there. But this would be very easy to port over to Hummingbot soon once we get some of those pieces in place.
Yeah. One question is which are the requirements to run your RPC node of the machine that you need?
I leased a node from QuickNode. Just because I didn't want to have to set up my own box. I was going to set up one on AWS, but I just decided to try to lease one first just so I could test the performance. And so I'm leasing like the mid-tier offering on QuickNode right now. I think it's $10 a month. I think you get something like 10 million API credits and you get like 40 requests per second, which is more than...
Yeah, more than. And what did you write it in Python? the
So
bot?
it's written in TypeScript. Yeah.
TypeScript? Okay.
Yeah.
Yeah,
I
that's
use the
SDK.
native, the native SDK language from the Orca.
Yeah,
And
So yeah, in a couple of weeks, the Orca kind of will be done. So you guys can basically map these REST endpoints into the gateway. So yeah, so the basically I've been using Cursor quite a lot. It's really helpful. It's helping me just map the Orca example endpoints into a standardized format. So I'm hoping to do that with Orca, Radium, like Jupyter, and the core Solana endpoints, and just get them into a gateway like repo in the next couple weeks.
yeah. That's good. And to answer your question, Christophe, I am scaling it up right now. I had to do one of the reasons why I couldn't scale it immediately was because I did not code it to do the swaps during the initial test. So I was kind of manually balancing the wallet while it was trading. So, with the small amount of, $5, I think I put $4,000 in there and I was able to kind of keep the wallet in balance. But another key piece of this is the bot has to maintain the balance, because every time you withdraw and deposit liquidity, the ratios get out of balance and it kind of will very, very quickly run out of capital on one side or the other. So I had to implement swaps. So last night I coded actually implementing Jupyter, swapping on Jupyter into the bot, and I am actually excluding Orca from Jupyter's matching. So they have a feature where you exclude a DEX, because I don't want to swap on the same pool that I'm LPing in. So because that way I'm not paying fees doing my own swaps and then paying it and receiving it. So I'm excluding Orca, which is allowing me to, I guess, I don't know if that's sort of like doing a little bit of an arbitrage against Radium and other pools that I'm pulling from when I'm swapping, and then I'm depositing it into Orca's pool. But swap allowed me to scale it, and I actually ran a test last night where I put $500 into it, and it made $10 in an hour. So that was 2% in an hour, which is pretty decent. So I'm going to continue to scale this up.
Pretty decent, no, pre-edition. Pre-edition is very, very good.
Yeah, I've been amazed at how well it's performing. But what were we going to? I'm something like.
Thanks. And one question there regarding to rebalancing. Your buckets are like 1%. You mentioned
they're 0.1%. Yes.
0.1%. So
yeah, they're 0.1% wide. Yes.
And you are putting all the liquidity in that bucket of.
And one. Yes, I'm putting all the liquidity in the bucket that is basically around the price. Yes. So that keeps liquidity in range constantly. And that's
so you need to move it very, very fast. Well, very, very frequently.
Right. Yeah.
Yeah. But it's very good. It's impressive. Very good job.
Yeah. But by the way, Matt, I definitely agree with using Jupyter to do the swaps. I think I would say one I would look at it is kind of like, is there speed? Is there cost in terms of speed in terms of using Jupyter versus direct swaps on Orca? However, I think I'm not sure if excluding Orca from the Jupyter matching engine makes sense here, because it's kind of like, the way I think about it is like, it's like I don't want to use my own pool because the price is like might be bad, but it's like, all things being equal, if I'm going to do a swap, I want to earn the fees from that swap if I can, So to me, actually, it's kind of like in the Jupyter Match engine, if I include my own Orca pool, that's a good thing, because if that's the best price, then I do want to swap with that pool.
Okay, gotcha. Well, I wasn't totally sure about that, so I thought I'd ask.
Yeah, sure. But overall, I think I really like the idea of like creating these separate buckets and just like moving your asset between the two. One thing I would look at is like, I'm not sure if I would rebalance right away if it moves outside the range, because it's kind of like, probabilistically, if it moves like, let's say, one tick outside, it might come back. So what I would try to set like some type of like, variable, like, it has to move X% outside for at least like 5 seconds or something like that before I do a rebalance.
That's a good idea.
Yeah. Or the other way will be like, for example, in the current buckets, you have like 80% of the capital, and in the two of the side, like 10% and 10%, something like that. And then you move like a block from one side to that can be like another option to try. It's something to try because at the end you need to compare which is the one that gives you the most of the money. But yeah.
Yeah, I had thought about trying to lead the price with the deposit, so that it would, set it up and then the price would run into the next bucket, and it would actually be faster and cheaper if I could do that because I don't have to do the ratios. I can just do one or all of one asset or the other, all Solana or all USDC. And then if there was some way for me to tell where the price is going to go before it goes there, obviously that's what we're all trying to do. Then I could kind of front run the buckets a little bit, and that would be more efficient too. But yeah, it's a good idea to split it up a little bit.
Yeah, but well, great job again.
Thank you.
Yeah. All right, thanks, Matt. Let's move on. I think we have 3 more to go. Actually, one more thing is I think if Chris is on the line, I didn't see a video for your presentation, Chris. But if you want to explain it, so I have you at the very end. But if you do a video, you can send it to me, and I can play it. It's for Chris Mercer, by the way. So we have a couple of videos. The next one is from Siam. This is multi-asset cross-exchange market making. So I think this video is a bit long. So I think what I'm gonna do is I'm gonna try to play it on YouTube, and I'll play it at like 1.5x speed.
Hi, my name is Siam. I did multi-asset cross-exchange market making as my cohort 9 project. So let's see what I did. The goal is to make a profit at the opportunity by selecting asset from top 3 assets in low volatility scenarios. So I tried selecting multi-asset with low volatility that I use some rules I will explain in the future. The strategy will generate more consistent return and higher profit by maximize spread with taker exchange. That's my ideas. So at low volatility asset, the wider spread compared to high volatility asset allow better profit opportunities when executing trade with the taker exchange. So my strategy use the basic principle for do a market making for crossing exchange. So I add some rules for implement the market making model when I found some low volatility. Okay, for the test I run it like 2 days using my risk around 5%. I use the real account and probably $200 and yeah, let me check that first. Okay, I'm place a trade around okay, I'll place a trade around 10 USDT, something like that. Yes, use around 10 USDT. That would be 5%. Here is my strategy design. Check this out. Okay, at first, at the beginning of the week, I would say that I buy some suitable asset that both available in Binance and Gate.io, and then I checked for low volatility. If it have some assets with my criteria, it found some assets, some bucket, let's say 5 or 10, I use only top 3 of that. Okay, and then I will perform the market making cross exchange model that when there are no maker buy order, fetch the sale price, calculating by order price, and then place the maker order. Do it both for buy and sell. Okay, and if market order fail, execute taker on opposite side. And if it's unprofitable, I cancel and refresh market order. If so, I try this process, my plan for the whole week, and at the next week, I will view for the new candidates for low volatility asset again and again. And if some week there are no asset with my filter, then I will wait for the next week. Okay, the idea, I will place the maker order at the wider spread exchange, and will place taker order at tighter spread exchange. Use our Binance and Gate.io. Okay, so let's say I start my equity at 100%. I spread to 50% for the maker and taker. That let's say I buy the coin 50% for place the sell limit order. Okay, something like that. Let's see my result. Okay, from here. I run around 34 hours for my 3 candidates, HBAR, USDT, and okay, let's see its result for the first coin. I take 4 trades and it's profitable. Okay, that's great. Next. The next coin is YFI. This is a losing trade, around 5%, 10 USDT. And next one is, okay, CHC USDT. That also the losing trade, or it combined with winning trade and losing trade. So it's still in a loss, there's a little bit of loss. Okay, so here is a trade record. Oh yes, that's the idea of cross-exchange market making. Okay, here that when I run the model on my live account, okay, it plays the limit order buy and sell on Binance. I use the Binance for maker side. And next, okay, some historical order. Here it is. For HBAR USDT, I take 3 trade for Binance for maker. Okay, and that's it. For Gate.io or HBAR, I will show you here. For Gate.io, have 1 trade for HBAR. My historical order look like this. Okay, that's the result for running around almost 2 days. So I think it's interesting to optimize something. Let's go back to here. So I think it's still very interesting strategy that probably I can reduce the asset risk that can go down when we do the market making. Probably take our short perpetual 100% to reduce the risk for holding the coin. And it can optimizable for these variables. That's it. Rebalancing period. At this project, I just use 1 week, so it can be 1 hour, 3 hours, anything. So that's interesting to find out. Low volatility criteria. Okay, that one part that I still not cover. My bad. Okay, this one. This is the Python script or Jupyter notebook file that I are using for scan the top 3 low volatility, as I mentioned. Okay, okay, it's some connector to Gate.io and Binance. So let's see my low volatility criteria. Okay, here it is. I use the volume of USD that it's not much liquidity. Okay, no greater than 200,000 USD and at least 10,000 USD are 0.01 volatility, 1 for normalized ATR and 15 for our bandwidth of Bollinger Band. Okay, that another part can be optimizable. So I think it's very interesting to improve the strategy, and I think that's all. Thank you.
Thank you very much, Siam, for that presentation. great use of QuantSlab, as Fede mentioned. A couple of recommendations in terms of how to improve your strategy here on out. I like the fact that you use the QuantSlab to do screening. However, I'm not sure if I would use volatility as a lower volatility as the criteria, mainly because I think if you're doing cross exchange market making, it's kind of like volatility actually helps you, because it's like the more volatile a pair is, the more likely that there's like going to be a dislocation, let's say, between Gate and Binance, right? So I think to me, actually, what I screen for is kind of like that differential. It's like I think if you downloaded, let's say, candles from Gate and then candles from Binance for a bunch of pairs, you can compare like the mid price, and see which ones have the highest like differential in the same like candle. So I would identify the pairs where it's like I would say, like, because normally you have to hold the asset, so you have to come to holding asset. But of the ones where you're comfortable holding, which ones have the biggest differential in price between Binance and Gate? I think those are the pairs that'd be really good to do cross exchange market making on. My second piece of advice is, I noticed that some of your performance analysis, I think some of you're doing cross exchange market making, but you have some cases where you're like one or two buy trades, one sell trade. So that might be an indication that certain filled maker orders are not being hedged, because ideally with cross exchange market making, you have a matching taker order for every filled maker order, because that's where the hedging takes place. So if it's not hedging, it might be because of some issues. So I would actually look at the logs to try to understand why first.
One thing, if he's talking about trades, maybe there are like partial fills there are like 2 trades for 1 order, so that's something to review. But it has to be, the volume has to be the same that the one that you are doing. But it's a good observation, Mike.
Yeah, and usually this because it's like, usually it could be because like there are certain there's like volume, maybe because like there wasn't enough volume on the taker side to execute the trade. Are using limit orders or make orders? So basically with cross exchange market making, there's always this like mechanical aspect of making sure that every filled make order has a corresponding like take order, and if you can get that like mechanics right, then as long as that spread is there, you can capture it. Any other questions from the audience for Siam or Siam? Sorry.
Oh yes, yes.
I have one. Is like when you did the rebalancing, how do you think that you can improve the rebalance over time?
Actually, I just use arbitrary number, just yes, or 1 week, or for easier to handle, something like that. And yes, I think I still have a lot of things to learn, like
No, yeah, but it's a great starting point, and this is one of the strategies that if you master how to pick the markets and where to trade this strategy, it's a strategy that can give you like yields like without risk, because you are not trying to predict anything. You are just taking advantage of market discrepancies. So it's a very good strategy to get involved with. The thing is that this strategy is very like also related to, it's going to be as good as you can optimize the costs and the transactions that you are doing, right? So the next recommendation that I will do is that it's good that you define like a time window to do the rebalance, but I will try to incorporate as this imbalance that you are generating, because let's say that in exchange A, you are buying, and exchange B, you are selling. Now you would like to sell in exchange A and buy in exchange B, because you did the opposite operation and you get imbalance in that way, right? So what I will do is to, while the bot is running, try to adjust the parameters to like, how to say, to make it more likely to get filled the side that you need to rebalance. You can do it like, it's not like shifting the mid price, but like lower down the expected profitability from the place that you did the opposite trade. So it's like you are like rebalancing with less costs more frequently, and you can continue play your game. But it's a little bit advanced, because if you do that, is that you can run the bot forever and drink coffee and look the profits. But I will, if I'm you and you would like to get pro in this strategy, I will pursue that. Like, try to have something that's slightly rebalance with a lower down the profitability, and you don't need to do a market rebalance, because usually if you do the market rebalance, you will need to pay fees in the exchange that you are getting profits from that. So that is what you don't want at some point, because the maker exchange will not have too much liquidity. That is why you are taking advantage of that. But well, that is my recommendation. But great work here.
Well, thank you. That's very informative.
Perfect.
Right. Well, thank you, Siam. Next one we have is it's called Liquidhood CEX-DEX from Gerald. This is also a fairly long video, so I'm gonna play the on YouTube with a higher speed, and I might skip over some parts to speed things along a bit.
Yeah. So just to chime in there, Mike. The whole video is really trying to explain why, I guess my idea is a cross exchange market making, but then there was so many challenges that I've encountered, and specifically selecting what exchanges that I would need to do that cross market exchange, as well as finding the region and also connectors. That was another piece that kind of came into mind when I was going through debugging and tried to make the setup work. So, for instance, before I really wanted to use DYDX as kind of like the way I could use KuCoin DYDX to steal liquidity from KuCoin and trade it on DYDX or vice versa. And during one of the tutor sessions, I asked Fredo, and Fredo kind of mentioned to me that it wasn't really working with that version of new Hummingbot that was released, but we could compile it and be able to inject those DYDX features. So I did that, and I did that locally, and it was kind of like working fine. But the minute I wanted to implement it on the cloud, I just realized that the web UI wasn't really working for me on the section where I would need to add credentials. Yeah, even though I believe one of the guys from Hummingbot mentioned that it was fixed or it was supposed to be working, I couldn't really get it to work on my cloud setup. So I decided to abandon that and move over into the client setup. And with the client setup, I was able to, and this is the portion that I wanted to kind of capture to make sure that when I'm explaining it actually makes sense. So with the client setup, it was fine. I was able to add KuCoin API keys. I was able also to add CEX-DEX, DEX-a-lot, Uniswap, as well as Traders Joe. Now, when it comes to actually launching the bot, I mean, this one here, you can see that this is just the way that I was going to select the word trading pairs that I want to use. So I'll come to CoinGecko and look at the exchanges and then try to sort them out based on the spreads. And the one with the tighter spreads, I'll try to look on the other side of the different exchange, whether it has wider spreads. And this way I could create that mapping. If KuCoin had thinner spreads, then I could trade it on DEX-a-lot with wider spread, because I'll be stealing liquidity from KuCoin and might, well, send it over into CEX-DEX or DEX-a-lot. So that on itself also did not work, because when I launched the bot with very minimum configurations, still it would say that the connector's name was not the same, or something we'll say like CEX-DEX launched, but it's still waiting for it to connect. So really kind of really weird stuff that it just led into a downward spiral of me just debugging rather than actually using the market making theory to implement what I wanted to kind of share with everybody. So at the end of the day, I think Huang helped me slightly on the last session that we had. We looked at the logs and discovered that maybe the connectors names them might not be the same in V2, even though I tried to change those connectors name specifically for the gateways. That also gave another error. So realistically, I wasn't able to get the bot to work. Either it's due to issues with connectors, or it's just my setup just somehow is a little bit buggy. I couldn't really figure it out. Yeah.
Got it. Yeah. So maybe actually, let me just chime in a bit. So yeah. So I think what you're finding is, I think this is actually one of the main kind of like conundrums with just like market making in general, which is it's kind of like the strategy is dependent on which exchanges you run it on, you know, and so for us, like what we try to do is we try to maintain like the top exchanges of each type. So right now it's probably Binance and Binance Futures, and then OKX probably, but then because the other connectors in our code base are kind of like community based, because there's no way we can kind of like build a framework and support every single exchange. We only focus on supporting the top ones. We let the community, we try to use bounties to get people to support the other exchanges like DEX or DYDX or other ones. So what it turns out is like, I think what you're finding is the best opportunities are kind of between the smaller and the most new exchanges, right? But those are also the ones where the connectors are the least reliable because they're community maintained. So that's why I would say there's a kind of unfortunately there's no unavoidable way for this, because there's no way to support, like it's like if the market did support DEXLot super well, there likely wouldn't be the opportunities there, because now everyone's using it, you know. So what tends to happen is it's like in order to use the newest exchanges, you kind of have to kind of go through the issues you're going through, or be technical enough to kind of like go around them. Whereas like if you kind of wanted to use something like out of the box, I would say realistically, it really only works well for like Binance, OKX, and on the core strategies.
Right. And that's another issue with my jurisdiction, or even like the Binance account that I had before. They don't allow people to trade in Canada. So
yeah, I know. Yeah. Unfortunately, and I'm very sympathetic to that. You know, it's something I face myself as a U.S. resident. Obviously, there are workarounds, but it's not not ideal.
Yeah, from my side, I would say that, well, DEXLot is one of the connectors that is not working, and there is one like ongoing PR that a developer is doing to like move all the connector from the gateway to Python. That is like an ongoing bounty, so you will be able to use DEXLot soon. But usually the connector is not something that changed between V1 and V2. It's the same, because it's the same strategy framework. But I think that if you want to use a DEX connector in the name, maybe Mike can answer this better, because I didn't use the gateway too much. But it's like DEXLot _ mainnet or something like that. So you need to put like the chain or something.
Yeah, this is because the history is we initially started building order book connectors in the gateway. We realized after doing DEXLot and I think one or two other ones that it was just too slow. Basically, order book connectors require a WebSocket interface or like something that actually really integrates with the order book. When you introduce like an intermediary middle layer, it makes it much more complicated. So we started moving all order book connectors to the client, starting probably a year ago with DYDX, Hyperliquid, Vertex, and those. So I would say now the new standard is all order book connectors should go directly to the client, which is why currently the DEXLot connector, which was the original gateway cloud connector, is being rebuilt right now. This current one that you're using, unfortunately, doesn't work very well. But as you're saying, even the DYDX one, because DYDX, and this is kind of getting the weeds a bit on kind of why connector issues are prevalent. The DYDX connector that we just introduced, unfortunately, has a conflict with Injective, because they both depend on this library, but they use it in different ways. So it's like an issue with their SDKs that we can't. It's not in our code, but the only thing we can really do is introduce like a separate process for people who want to use DYDX, for them to like install a separate Docker image, and so that they're not loading both injective and DYDX in the same code. So what you're hitting is we haven't incorporated that into the UI yet. So I think we're actually kind of working with DYDX and creating a connector guide that allows people to use a new DYDX connector effectively. Yeah, unfortunately, I think what you're hitting is this is the kind of the open source. It's both. It's kind of unfortunately we can't support every exchange very well, but I do commend you on trying to make it work, especially using this particular strategy, because I do think this particular strategy of basically using cross-exchange market making to earn rewards, I think is going to be a very valid one long term, because there's many small exchanges that are offering rewards, and if you can hedge that risk on Binance or some other centralized exchange, then and just earn the fees, earn that spread, then I think you can do that across many different exchanges.
So are you saying all the gateway connectors, they're not managed by Hummingbot? It's a community that generates them?
Yeah, well, I was curious. The entire Hummingbot project is a community project,
right?
Because and so the reality is there's different aspects of Hummingbot. There's like the client, there's the strategies, and the connectors, and we can't maintain every aspect, the same standard. There's no way. Like we have a limited amount of bandwidth that we from just a people and effort standpoint. So I would say we tend to choose to focus on the client, like adding different pieces of the client, adding different strategy frameworks, but then only maintaining the top exchange connectors of each type. Essentially Binance is really the only one that we maintain. And then we use bounties to allow the community to support other exchanges up to that same standard.
So to the same token, do you have any like top gateway or DEX exchanges that Hummingbot is maintaining, like Uniswap or like something like that? I don't know.
Yeah, so right now we use up the standard. But I think what I was alluding to earlier, and you probably talked about top of alpha hours, is I think the gateway project was unfortunately we realized after a couple of years the architecture we kind of got it wrong, and not because we didn't know what we were doing, we didn't know what to design for. So I'm actually working on a new test repo that I think will eventually be the successor to gateway. But right now, all it does is support Orca and Solana, and it's also like they're experimental. So if you want to check it out, you can check it out. It's my personal repo. It's called LARP. But I think I would say I want to kind of experiment with that just on my own. Make sure we get the architecture right. I think eventually it should do the same thing as Gateway, with like with much simpler, much cleaner code architecture. But right now it's still very experimental.
Okay. Cool. Thank you.
But yeah, as I mentioned, Gerald, I think that I would say, I think as a user, I'm glad that you really kind of took the steps of doing the design template and trying this approach, because I think this approach is going to be effective. I think once you kind of sort out all the connector issues.
Cool.
Yeah. Dimitri?
Sorry. Regarding the research phase that you were doing. Sorry, Dimitri, you want to talk? I didn't saw it. Sorry. But I will be very quick. But regarding to the research of the pairs, the thing that you were doing with CoinGecko was totally right, because usually it's a very easy way to see the taker exchange where it has the tight spreads and good volume, because you also want to have good volume. But at some point you would like to automate that or abstract that to be able to compare different exchanges. For that, if you see in the dashboard, when you launch the dashboard, the community pages, I think they are called, there is one that is comparing the spread and the volume. So you have a scatter plot of spreads and volumes for a token. If you check that code, there is a CoinGecko API wrapper that I did there. I think I am using PyCoinGecko. So if you check the dashboard pages, you will see that. And well, with that, you can compare, okay, these are the exchanges that are supported by Hummingbot. So the first thing is filtering the exchanges supported by Hummingbot that you have access, and then give me all the pairs and compare the spread and volume. So you would like to get, first of all, the ones that have the most of the volume, because if there is no volume, but there is big spread, it's almost the same. You need to also have a little bit of volume and get one that has big spread and one that has a low spread. And that will like automate a little bit the screener part that you are working on.
Okay, sounds good.
I have a question regarding your strategy when you intend to do cross-exchange market making between limit order book markets and automated market making markets. I saw in your template that there is you mentioned cross-exchange market making between KuCoin and Uniswap.
Mhm.
And I'm interested in what's your plan there, and if you like had a chance to like do some research there. I'm asking because that's kind of what I was working on last cohort, exactly cross-exchange market making between limit order books and IMMs. My plan was to do market maker orders on IMMs through concentrated liquidity positions, like outside of range, like out of price concentrated liquidity positions. Later, I realized it hit me that maybe the other way around is actually a better way to go, because like for small amounts, IMMs basically do not have spread at all, because like there is no such thing as spread. You are somewhere in the range of liquidity, and you have slippage, yes, but for like small amounts of money, like of orders, you basically like can buy and sell at the same price. Not really, but like maybe it's better that way around, to take liquidity from IMMs and provide it on limit order books. So want to hear your thoughts. What was you thinking of there?
Yeah, so for me, really, one of the challenges to work with AMMs is just because there was no really good way to do analysis and figuring out volume, spread, and volatility. And not only that, but also the options to use centralized exchanges, for me, given my location, was very limited. So I almost kind of remained with KuCoin. And with KuCoin, what I did was try to understand what are the trading pairs that with the lowest spread possible, as well as high volatility and volume. And then using that as my mechanism to create that maker exchange on the centralized exchange side. And yeah, hoping that will reduce the liquidity from centralized exchange into a DEX that either is a new DEX or is trading very limited number of pairs. For instance, DEX a lot, they trade only 15 pairs. And I think there's really good opportunity there to kind of like help them to improve liquidity. So on the admin side.
Sorry, I don't want to take off, but yeah, we want to try to, there's one more presentation we're voting off to do. So I want to just try to box the conversation if I can.
Right. So long story short, it's really, I was just trying to figure this out, the CEX-DEX, but I couldn't really get to the level where I have concrete understanding because my code or the setup that I have doesn't work. That's kind of like all I'm trying to say. Yeah.
Yeah. So overall on this, I would say between the AMMs and the CEX part, I would say I would hesitate to draw any general conclusions. because it depends on generally the general conclusion I would draw is in any financial market, if an asset trades on multiple markets, generally the one that came first and the one with the most liquidity is the primary market. So that tends to drive the activity for that asset. So I would actually generally, if you're doing cross exchange market making, make on the less liquid markets, you know, and take from the most liquid markets. Doesn't matter whether it's AMM or it's an order book. The one with most liquidity is going to move first. All right, so let's move ahead. We have one more presentation left. I think actually, Chris, I think actually I see your video in the Notion. But do you want me to play your video, or do you want to go through it, or how do you want me to kind of play your video?
Mike, I just did, you know that we've been working on cross-exchange connectors, so relevant to these guys' conversations. So that was my original plan for this class, but the PR isn't ready yet. So I'll end up doing that in the long run. Oh, interesting. Oh, I don't know. Oh, sorry. So this is the CEX-DEX script. Yeah. So anyway,
I do have your video. I do see your video for the other one. So I can either play. Basically, it's up to you. I can play your video, or I can have to explain this one. It's really it's up to you.
Well, I actually didn't end up. I had the same problems as the gentleman that was right before me, so I ended up not doing this CEX-DEX script, so I deleted it. So what I did was I tried a couple of things. I'll end up doing the CEX-DEX, but I couldn't get Kraken to integrate. And so I'm not sure what's going on with that, if that's KYC stuff or what. But I primarily had an established Coinbase account, and you know, I'm US based, so I'm dealing with the same issues as everyone else of jurisdictions. Yes, you can do VPN and everything, but the thing is how do we operate this as some sort of company or something like that legally? And so anyway, so I found I'm just doing the market making operator. And the original intent is to have ETCSwap, and then I have a ETC USD pair on a DEX, and I was going to do source liquidity from Coinbase and then rebalance through a centralized bridge that has nominal fees. I think it's like 5 cents to mint and burn and redeem. So that's kind of the original thing that I will be doing once we get the PR. But in the meantime, what I did was I just set up this script for triangular arb on Coinbase. It's been running for about 12 hours. There was an opportunity for profit, but I had the profit set too high because I was looking at my account. You know that Coinbase fees are pretty high, but if you hit a certain number of volume, the fees go down to a comparable amount. So my fees right now in the account are like 0.25% for the taker. So I could have actually made profit because I saw it go up to about 0.5%. And so that was just it running for 30 seconds. So it hasn't really done any trades. It looks like mostly it's negative 0.25% on both sides. But last night, you know, in the middle of the nights, you see those big movements on BTC USD. That's the driving market, just as you were talking about of if you're doing if you're doing the same alt market on a CEX and a DEX in a triangular arb, BTC USD is the highest volume pair, so that's the driving market. So when we see volatility there, what you're hoping is you're seeing latency on the backside on the other two markets. This script that Victoria, I think, wrote in September 2022 is pretty raw. It executes the order sequentially. So we have some from I've been around the space in a while. We used to do these counter trades at Shapeshift, and we would use Python, and we'd kind of execute them all at the same time. We'd also source from multiple exchanges to try to get the best rate and fractionalize the trade. So we do some of that, but just running this simple script, it's very good in its form and understanding kind of the format of where she made it in this cohort. I think it was cohort 1, if I'm correct. But anyways, generally it's working. I did see some profitability. I just didn't have the setting correct. I'm hoping tonight, I'm like 12 hours in on it. I'm hoping tonight that that it actually pulls a trade or two. You can set it negative on profitability and you'll see all the logic works out. It also has a kill switch where you can set like, oh, my total profit dropped to, you know, went down by like, let's say 1%. It'll stop that. It'll stop the strategy. And so then you come and you check it and then you restart, see what the heck was going on. So that's kind of a fail safe in there. It also, if an order, because it's sequential, if an order fails, it'll keep checking and it'll try to replace that order. So it's smart on that. So I was hoping that just running this might do something for the requirement for market making. I'm not sure if it will, but otherwise, as you said at the start of the call, I'll once we get that PR in for the ETCSwap and all of that, I'll submit something else that's going to be a DEX to market maker order strategy. And so I'll get that handled. So sorry for taking up too much time, but that's kind of last night. I was like, oh my gosh, like everything was failing, you know. But this strategy worked out fine, and it was on an exchange that I had set up. The balance is loaded. I couldn't do in V2 dashboard, so still don't have connectivity in there with any exchange I use. But I did do this on the V1 client, which is sufficient enough if you're familiar with the command line. So.
Cool. Very well, Chris. One question about the connectivity is that you're trying to connect with Coinbase in the dashboard and you can't.
That's correct. Yeah, Coinbase Advanced Trade did not connect in the V2 dashboard for me. The only one I did get to work was Binance US, but I don't have any funds there, and I wasn't sure if I had I hadn't done KYC or anything, so I wasn't sure if I'd get restricted on depositing, withdrawing, and everything. So you guys know it's like when you're starting a new account of how you need to be careful, like especially with those Chinese exchanges where they're like, yeah, deposit your funds, but then you can never get them out, right? So
to be honest, so Binance US, they want to work with us right now. Basically, right now the kind of time I hack because like you just replace API endpoints. We are considering, kind of like actually doing a proper connector for Binance US. The issue is, I would say, like I think even as a US resident, I've been testing out their exchange, and their fees are much higher, and they have less liquidity than other exchanges. So I'm not sure it really makes sense, you know, as a user myself. It's more just to allow people to use exchanges that that they can't otherwise use. I totally hear you on the using dashboard with Coinbase and Kraken. It's probably something our support team should look into to see what the issues are. My understanding with Kraken is that there's something with the account where it's like, depending on where you're located, and it's like the type of account you create, it actually changes how you connect, or something like that. Because like we've had certain users who are like, hey, yes, it works fine for me, and other users who are like, no, I can't connect at all. And we're still trying to figure out what the difference is.
And I'm wondering if it's, do you know which ones are successful? Because is it the starter account, intermediate account, or whatever the other setting? I KYC to what is the middle one? Whatever the middle one is, intermediate. Yeah. I connected to that, but it just errors every time I try to put in the code. I regenerated it numerous times. I set it up as your guide in the docs, you know, all the permissions, and I couldn't get it going. So
you're based in the US, right?
Yeah, I'm in Colorado.
Okay. Yeah, I think that's what I'm using too. I don't think I'm using Pro. I think I'm on Pro now, but I feel like I was using this when I was on intermediate as well. So anyway, I'll try it again to see maybe if any or other people in the US maybe want to or can give feedback. But I think I do think there's some issues. We haven't identified exactly what the issue is with both Kraken and Coinbase in terms of account setup. But so kind of overall, I totally sympathize is what I'm saying.
Yeah. Hey, and this is, if you've been in this space, this is how it always goes, is the integration. I started the process for Kraken. I haven't been able to KYC with Kraken forever. So it's been a nightmare. And I mean, I met Jesse like back in the days, and I'm just like, God, like I hate your product, like your onboarding. But I was trying to do a company KYC like a week ago for this, because I was like, oh, that'll give me whatever the highest tier status for rate limits or whatever, especially the WebSockets, right? Like you were explaining earlier. And it's just, I'm stuck in KYC purgatory over there, you know? So anyways, so this is kind of what I was doing. And then And then to the gentleman's doing the DEX and CEX stuff that we're just talking, hopefully we stay connected. We're doing a PR for Ethereum Classic. It has huge centralized markets, and we're building up the decentralized markets now. I put a regulated stablecoin online, and on the backside, if you're willing to KYC with your business, you can use that centralized bridge that is safe because it's all custody and everything like that. And it connects. So this is why I was going to do Coinbase. Coinbase does free withdrawal fees on Avalanche. So you can move USDC out of Coinbase for free into the company is called Braille. They're out of Des Moines, Iowa. And you can convert that USDC into USC, which is the stablecoin we did on Classic, for like pennies. It also, you don't have to do Avalanche. There's like 8 other networks like Optimism, Polygon, any of the EVMs, where also Solana is hooked in there. So it's connected on the backside, that stablecoin, into all of this, anything that has USDC on all the other networks. And so you can essentially send in a Braille, mint and redeem, as long as you KYC with them, is like pennies. And so in terms of friction, if you can get an exchange to do the withdrawals on it and it has competitive fees, you're looking, rebalancing fees are like pennies, right? And if you try on any other market, it's like at least $10 to do a big rebalancing, right? So this allows you to work with very little liquidity. So the hope is we get those online. The hope is that we already have Uniswap v3 on Ethereum Classic. And then the hope is like these type of strategies that whoever the last presenter was, where they're moving the concentrated liquidity, we start building stuff like that, where essentially my thought is for that strategy is to end up, you're providing liquidity around 100 bips around the spot price. And then when you see arbitrage activity, you're pulling your liquidity, executing an atomic swap. So any remaining liquidity, you're extracting value out of them, the unmanaged liquidity. You're moving the price back to where spot is on the centralized exchange, and then dropping your liquidity again, right? And then that allows for order depth to be around. You're not worrying about losing your liquidity. And then you're also extracting out of someone else's liquidity, right? If you're trading against your own liquidity, right, that's not great logic there. So anyway, so that's kind of my thought of where we're going with this. And I hope by the next cohort, by 10, we'll have a really good demo of something operating here as we're building the market. Where it's only like 50,000 liquidity in that pool right now, but we're working with some people. We're trying to get some substantial money in that pool. And then the hope is to have Hummingbot people interacting with it and onboarding a sophisticated high-frequency trader community into that ecosystem, because right now the users aren't very smart and don't really understand DeFi, and everything's very slow. So plenty of alpha in there. So hopefully that's where we're going in the future. Thanks for the time. Sorry for talking so long.
That's good.
No problem. No, yeah, no, I think it's always glad to have like kind of like DEXs and exchanges participate in Botcamp, because I think obviously it's like the opportunities are really we need both opportunities to serve the trader population.
One last thing that I have a comment based on what you were presenting, Chris. I'm looking at the fee structure of Coinbase. They have to be in jail. There is a tip that they charge like 0.6% of fees to start. But what I will do if I'm you and you want to like continue doing this triangle arbitrage strategy, is that probably with a more like low frequency strategy or mid frequency strategy, like an agreed on some volatile markets, so the profits are greater than 1.5% because you need 0.6 to buy and 0.6 to sell, something like that. You can generate volume to go to the VIP, like from 100K to 1 million per month. And that might be more like you will be more likely to have like opportunities with those fees, because with 0.5 or 0.6% is a little bit complicated.
Right. And I was looking at that as well. And that's how I missed the opportunity last night, was I set it up at the highest fee tier. And then I was like, oh, this account has activity in it. So what is my actual fee? And that's when I realized that it was 0.25% in this account right now, just based on your last 30 days volume. And so that's just me manually arbing the market for ETCSwap. And so the thought was, if you're running any other strategy, hopefully it lowers you down. And then in this script is so simple that all you have to do is you just say, okay, well, what's my fee? And then it says your desired profit. You just include that in there, right? I think Victoria should have put a fee field in there. It's just so easy to do. But it's also, as a human, it's so easy to just add that into whatever you set the profit at, right? So as long as, so it's, you know, it's whatever. And you're right. It's, you know, this is something that's just sitting there sniffing for any opportunity. Another thing I would improve on this, outside of like the orders executed in the same time, and then also adding just a separate field for fee, would be sniffing multiple markets. Because what's great about this script is that you only have to have the holding asset. If you did this execution at the exact same time, you'd have to have all three assets so that you could execute, you know. But in this one, because it's sequential, you only need to have USDC, right? And so what would be great is to look at every single possible route of USDC back to USDC, and you can find and sniff out alpha that way. We actually in 2019 we had a script that did this in Python, and we did it with Gemini and Coinbase, and pulled a pretty good profit off that, because back then their internal market makers were very shitty. So, and that's what's interesting, is that when you look at some of these bigger companies, their market makers aren't that great. I think Binance was really competitive, but Gemini and Coinbase, and actually Bittrex as well. Bittrex internal market maker was not that great. So you would end up finding where they had latency issues and all this. And if you can do that route, and it's not just hitting one alt, it's looking at all these different alts. And maybe even if you have alt to alt, right? If you can go, instead of doing triangular, you can go to the fourth. I mean, that's your possibilities are endless, and you're bound to find something. So for any of you Python guys, that you guys will kill it if you do something like that.
Yeah, great.
Yeah, totally. Cool. Well, thank you very much, Chris. Really, I apologize for the connectivity issues, but I think this strategy overall, I think, is super solid. So now let's move on to the voting round. So we're going to basically vote for each person will stack rank the 7 strategies that we've seen today, and then the top vote getter is going to get the cohort 9 MVP NFT. So here's the voting thing. I'm going to present. Actually, I'll just pull here right now. I think basically if I just present this here, you guys should go vote. I'm going to try this on my phone too, but basically this should work. So give me a second. My phone. Well, so see if you can do this with your phone here. I'll also put a link here as well. In case you guys are on a computer. 1 second. I'll share this in the Zoom link chat as well. Okay. Present. Let's see if this works. Okay, so the way this works is that we're going to vote for our stack rank our favorite strategies of the 7 that we've seen today, and then afterwards, basically the winner gets the cohort MVP NFT. But everyone who presented is going to get the cohort NFT. So here are the strategies. Basically, I think you're going to rank these in order, and then hit submit. And then after you submit, I think you should see it update here. So let me do the. So I'll give everyone maybe another 1 minute or so. Do a timer here. Okay, I think it looks like 17 submissions so far. I think we're almost done. So yeah, just if anyone needs more time, please let me know. But I think we'll call it in about yeah, call it like 10 seconds or so. So 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right, over. Okay. All right. So I think these are the official results. Congratulations, Matt, for winning the Cohort 9 MVP with the Shamu strategy. I think it's very much well reserved. I think it's a truly innovative use of kind of like the Orca, the Orca connector, creating a strategy, and hopefully what you're doing can possibly with Hummingbot in the future.
Yes, hopefully. Thank you very much.
Well, thanks to everyone for joining Demo Day for Cohort 9. I think this was honestly the best Demo Day we've had so far in terms of the quality of the strategies, how different they were, use of sophisticated techniques like key means clustering and principal component analysis, as well as use of new DEXs like Orca. So thanks everyone. So in terms of the logistics, I'll try to get this video posted on YouTube today, but we're going to include it in our newsletter that's going out later today, as well as I'll kick off the NFT process. So those of you who presented, please send me your Ethereum addresses, and I'll try to get the NFT published before end of this week. So yeah, once again, congratulations everyone. Thanks for joining, and I really want to thank you for all the hard work that you've put in during this cohort.
And thank you too, Mike and Fede, again. I know I've said it a few times, but thank you all for all the hard work you've done mentoring us and teaching us. Just want to honor y'all. I know this is it's a lot, and really, really thoroughly enjoyed this class.
Thanks. Thank you. Yeah, no, honestly, I had a lot of fun as well. Yeah, we're actually gonna meet up in Asia next week. We have a team offsite where we're gonna work hard and try to build a better version of Hummingbot for the future. Cool. Thanks everyone. Yeah, we'll see you on Discord. Bye.
Thank you. Congratulations.
Thanks, bye.